Good morning, everyone. Happy Thursday. My name is Gregory Schnese, and let's talk about Bitcoin Borrow Die. As always, these videos are for educational purposes only. They are not tax or financial advice. In the last video, we went over the basics of the buy, borrow, die strategy, and today I want to focus on the buy part and what powers this strategy. So the entire strategy is fueled by Bitcoin growth over time. So looking at these charts, we're assuming a 29% yearly growth in Bitcoin with a $10,000 loan that rolls over every year. On the left chart here, we have BTC price in red and the loan amount in blue. And as you can see, the Bitcoin price just runs away compared to the loan amount. This allows us to take out a loan against Bitcoin and roll it over every year as the price of Bitcoin appreciates. This is what drives the entire strategy. And then on the right-hand side here, looking at collateral, this is really interesting. As the Bitcoin price continues to grow, we need to post less collateral over time. So at the beginning, like year 2, year 4, for a $10,000 yearly loan with current Bitcoin price around $115,000, we would post about 0.3 BTC in year 2, going up to about 0.4, maybe 0.45 around year 4 and 5. And we can see this in the blue line on the right chart. But the collateral value, the red line in the right chart, just continues to go up and to the right, even if we're posting less collateral in BTC terms, because the BTC price appreciates so quickly. So this entire strategy is driven by Bitcoin appreciating at 30%, 25%, 40% per year. You can put in your own numbers at bitcoinborrowdie.com. And then looking at the buy, borrow, die strategy, the next question is, why Bitcoin, or why would Bitcoin grow at such a high rate year over year? So why buy Bitcoin? What is Bitcoin? What is money? We want to look at the properties of what makes a good money. So the main properties of money, and when we talk about money, we're talking Bitcoin, fiat, gold, these types of things. It's durability, so it needs to last over time. Portability, that you can move it across space. Fungibility, where each unit is basically the same as any other unit. If you get a $10 bill from somebody, you don't really care which $10 bill you get. It's just worth $10. Verifiability, so when you get the thing, you can cheaply and easily and quickly know that you're getting the thing. Divisibility, so you can buy big amounts, small amounts. Scarcity, this is a huge one. Established history, just trust, network effects, and people accepting it, merchants, that type of stuff. And then censorship resistant, where the money's actually going to work when you really want it to, or when you need it to, and even when it's inconvenient for others. So these are the main properties we would look at to assess a money or to grade a money. Bitcoin is a unique asset in the sense that it's one of a kind. It's a digital scarcity. It's a completely new idea. So when we look at these properties of money across something maybe more familiar like gold and fiat, we can take durability, for example. Gold is extremely durable. It doesn't rust, stays the same. Fiat decays over time. But on the flip side, portability is much harder with gold. It's expensive. It's dangerous to move a lot of gold. Fiat's much easier. You can wire it. You can move it through banks, that type of stuff. Fungibility, they're both very similar. Verifiability, I would score gold probably lower than a B here because it's really hard and expensive to verify that the gold is actually gold. Divisibility, again, it's hard to cut gold into very small pieces. Scarcity, I mean, a big old F for fiat. It's just something that people can print, so that's pretty clear. If you want more gold, you got to go out and dig it. You need proof of work to generate the gold. Fiat, people just make out of thin air. Established history is just kind of like how long they've been around and what type of networks are around it. And then censorship resistant. I mean, it kind of depends on how you look at this one for gold. It's very censorship resistant if you have like a gold bar in your hand and you're handing it to somebody locally. It gets much harder over distance and things like that. So this is kind of comparing the properties of money versus two monies that people are very familiar with. So then let's look at Bitcoin compared to gold and fiat across the same dimensions here. For durability, Bitcoin has a B versus A plus for gold and C for fiat. I think this is just a matter of time. As Bitcoin stays and grows, the durability factor will increase. Portability, I mean, you can send it over the Lightning Network, you can send it over layer 1, there's layer 3s, there's all sorts of ways to move Bitcoin quickly. Fungibility, I would give this higher. I think Bitcoin is very, very fungible. Verifiable, you can do this with your node really quickly. Divisible, again, it's programmatic. Digital money can be cut to small pieces or large pieces. Scarcity is a huge one here. We know there will only ever be 21 million Bitcoin. Nothing else, no other commodity is like this. Whenever prices go up for gold, silver, soybeans, these types of things, people will find more ways to generate them and more supply comes to market. Bitcoin is capped at 21 million. There will not be any more Bitcoin past that. Established history, it's just a newer technology, so give it time here. And then censorship resistant. You can send Bitcoin through the Bitcoin network, layer 1, and as long as you can sign the transaction, it's very hard to censor. So then with these properties in mind on the left-hand side, plus the network effects of Bitcoin as a technology, we have the best money plus rapid adoption. Bitcoin growing faster than the internet itself, and it has the best properties of money. So when you put these two things together, it equals Bitcoin price will continue to appreciate. Not to mention fiat debasement and how much money printing there is. So with this in mind, this gives us a sense of why we would want to buy Bitcoin, how it fuels this growth, and what it means to us in terms of rolling loans over yearly. So that's all for this video today. We'll discuss collateral and taking on loans more in the next video.